jobs and, of course, lives, the wreckage of the global supply chain, disrupted business conditions, just to name a few of the examples of the damage left behind. So in order to get back on track, central banks across the world have pumped in unprecedented monetary stimulus, which has given rise to another devil, skyrocketing inflation. Hey, and thanks for tuning in. Holly Shields here for Kalkine Media. Recent inflation figures from the US stated that the world's largest economy had been grappling with rising inflation, which is nearly at a 40-year high. It's obvious that inflation will be looming large in 2022 as a matter of concern, apart, of course, from the COVID-19 situation. The big question is whether these soaring inflation prices have peaked in 2021, or is there still more room left for aggregate prices to shoot up in 2022? As the Fed was planning to trim down its stimulus and increase interest rates to curb the money supply, Omicron concerns have again revived uncertainty, which is why the easing of inflationary pressures might exist till the very first few months of 2022. However, the Fed will also likely not let inflation get out of hand and might take some aggressive actions, which could hurt growth. If price pressures remain high, interest rates could start to see an uptick, which will have a negative impact on interest rate-sensitive sectors like real estate and other capital-intensive sectors. All decisions will be made based on the COVID-19 situation. And in December of 2021 FOMC meeting, the Fed planned to double the pace of the asset purchases taper, bringing all asset purchases to the end by March of 2022. However, it's also been stated that the path of the economy continues to depend on the course of the virus. Some analysts also believe that inflation might be very close to peaking out. In December last year, the Bank of England became the first major central bank to start increasing interest rates after the onset of the COVID-19 pandemic. It increased cash rates to 0.25%, and other countries like New Zealand have also upped the ante to curb the running inflation and increasing the rates for the first time in the last 7 years. So after a shocker in 2021, inflation in 2022 could peak. As central banks have started to increase interest rates, inflation could see a dip. However, new COVID variants have raised concerns over the central bank's move to continue doing so into 2022. The dilemma between saving the battered economy with keeping interest rates at historic lows or increasing interest rates to curb inflation will be vastly affected by the course of the virus. Now that you're up to speed, check out some of our other videos to stay up to date and boost your financial IQ. This has been Holly Shields for Kalkine Media.